Hey, this is Terrence Young, and today I want to do a quick training with you about your guide to private money, how to fund your real estate deals, and I promise you're looking in the wrong place. All right? So, when it comes to private money, pretty much any real estate investor, that's what you're looking for because with private money, there's so much flexibility with it, right? But here's the thing, what most gurus won't tell you, in order to get that private money, unless you got a rich grandma, aunt, uncle, or parents that just want to give you money because they believe in you, a lot of times before you get that private money, you got to have a proven track record. A proven track record in the real estate investing world. Whereas now they are willing to trust you with their money because they know, like, and trust you. So, first, let's talk about the different types of financial institutions there are. Okay? So, the type of loans that are out there, you have your conventional bank loans that most people know of, and then you also have home equity type loans, which you still get from your traditional banks. You got non institutional type loans. Those loans come from actually non institutional lenders that are not banks, but they're just lending institutions. Most people know about hard money loans, especially if you're in the buy, fix, and flip space, and private loans. That's pretty much what the private lenders where most investors that I know want to get to. Now, let's talk about each one of these. With your conventional bank, okay? Now, most people start with the bank. Now, the problem is a lot of times you may walk into a bank, your local bank, and they don't even do investment properties, right? So, if you're in the, let's just say you're looking to buy, fix, and flip a property, they're definitely not into that. Okay, they're not going to do it. If you find me a bank that will do a fix and flip, let me know about it. But normally they will not do that. Some banks, even if you're into long-term rentals, buying turnkey properties, there are a lot of banks out there that will not lend to investors. They're strictly residential properties. Doing your regular FHA loans, your regular conventional loans, right? And then another thing with conventional banks is you have to qualify. You have to qualify. Well, most institutions you have to qualify, but credit score really does matter. Okay, so normally if you're not a 680 or above, the bank's not even going to mess with you. Not only do you need the 680 or above, you also need your tax returns, at least 3 years. Have you been working? How much income do you make per month? So on and so on. So there's a lot of hoops you got to run through or go through to get bank financing. But like I said, if you're especially in the buy, fix, and flip world, the banks won't even mess with you. Another lender or another type of loan is your home equity loan. Now, this is basically if you own a home and then if you have equity in the home. Normally, a lot of people think, oh, I got all this equity. I could just go to the bank and I could just pull it out so I could start my real estate investing career. Once again, if you don't have the credit, that's an issue. If you do got a credit, that is something that you can do. But you also got to own a home. A lot of investors, you'd be surprised, they don't own homes. But you still have to qualify. You could have $500,000 in equity in your property, have no mortgage, but if you don't reach that, minimum 680 credit score, or have the income coming in from your job or business to support the loan, the bank will still turn you down. All right. So home equity loans, they're okay, but and once again, when you're doing that, you're using your own money. You're using the equity in your property, and how long would that last? I mean, it's a little risky, in my opinion. Now, the type of loans that I love are your non-institutional type loans and your hard money loans. So they're a lot more flexible. So a lot of times with the non-institutional or the hard money lenders, the banks are not involved. Okay, your own personal property, it's not involved in the mix. The only thing they really care about is the subject property, that investment property. How much value is in that property? If it's a buy, fix, and flip type property, how much? What is the ARV, the after repair value, after after it's fixed up? And they're willing to lend on that. Now, it's hit and miss with the credit score with the hard money lender, because some hard money lenders, they do require a certain credit score. Some don't. And that's what's great about the hard money ones, right? Because with them, sometimes they'll just look at the property. And if the property has enough equity, they may be okay with it, because they'll look at it as, okay, if they don't finish up what they need to finish up, I just take the property back. More of your non-institutional lenders, they're more credit score driven. But here's the thing. Let's just say where the bank is at a 680, the non-institutional, they might only be at a 620 to qualify. And it really just depends on the market, because when the market tightens up and interest rates start going up, then the credit criteria will start to tighten up. When things are really good and things are really booming, then a lot of times the credit criteria will loosen. Now, with your bank, credit unions, it don't matter what type of real estate economy that we're in. If you're not 680 or better, it's not happening. So, what's great about these institutions are that they're a little more flexible. It's about the deal. Yeah, you do have to have a certain amount of liquidity. Normally, you're not even required to have any type of income tax returns. They're usually just done off of bank statements, and they see that you have the liquidity to pay the closing costs. They're good, right? They're all good with that. Normally, you're going to be making a monthly interest-only payment with these institutions, except for, like, say, with the non-lending institution. If they're doing long-term financing, of course, that's going to be principal. It's principal and interest. And if, they require escrow, then there'll be taxes and insurance included in that. With the hard money lender, they do not do long-term financing. So they will require an interest-only payment every month until the project is done or the loan matures. And then at that point, you'll refinance or you'll sell to pay off the whole entire principal. Okay? So there's a lot of flexibility within those two dynamics of the non-institutional lender and the hard money lender. They're the ones that I love to use, and that's who I mostly use for my clients. Now, here's where we want to go. The private money lenders, right? So this is where I think most real estate investors strive to be. You want to be able to have that private money lender where you can literally just call up and say, hey, I need $150,000 on this project. Here's the project. Here's the scope of work. And, okay, just let me know when the closing is, and they wire the money to, for you to do the closing. Here's the thing when it comes to private lenders, all right? The gurus teach you to go out and find them, right? The problem is you're not really going to find a private lender unless you have a track record of being successful in this real estate industry, of being successful for flipping houses, turning around these properties and turning them into turnkey rentals, things like that. So unless you have a track record, and, I may or may not have said this earlier, unless it's, you have a rich mom, dad, uncle, grandma that's just going to give you money to go out here and try it because, your family, you have to build that track record. And once you build that track record and you have something that you can actually show of how you can help somebody else make money in their own portfolio, whether it's in their retirement account or however, that's when you'll find the private lenders, okay? Well, let's put it this way. That's what you can do for a private lender. But how do you find them? Just like the title says, I promise you, you're looking in the wrong place. Because in order to truly, and I believe it's the easiest way to find a private lender, the secret sauce, teach what you know. Go out here and start teaching what you know. And this is why you need to build that track record. Because when you come to a company like mine and we get you the financing that you need to be able to flip your properties or buy these turnkey rentals, each deal that you do, you're acquiring knowledge, okay? You're getting better and better at the skill set of real estate investing. Now go out and teach people what it is that you're learning. Whether you're going out there doing Facebook Lives, you have a space where you can invite people, you're going to your local RIA, you're talking about your deals and the successes that you've been having, the things that you've learned. You're showing other people how to get involved in real estate. And as you continue to do that, believe it or not, people are going to take notice. And when people take notice, everybody don't want to go out here and flip a property or, physically just get into the real estate game. But as you're teaching and you're showing the results of the type of monies that can be made within this business and the type of returns that they may be able to get, now you have put yourself as the expert. And those people that may have money and don't really want to get into get their hands dirty, they may just want to supply the money. They may just want to be able to get that return on their money. And so now you set yourself up to be in a position because now they know you, they like you, and they trust you. So now you can literally go to a private lender. And here's the thing. 9 times out of 10, they're going to come to you. They're going to come to you because you're out here, with your YouTube videos or, you're out here showing and teaching people what it is that you're actually doing in this business. And they have questions. And you're answering those questions. Now, here's the thing. Let's go back to the hard money lender. That hard money lender will dictate to you, you will pay me 15% interest. Interest only for 1 year and no questions asked. That's it. There, you have no say so. If you want to do this deal, this is the way it's done. Okay? Whereas now you have private lenders, people that want to give you money so they can make money. Now you have the ability to make some of the rules. Of course, both of you all have to be in agreement. Maybe you can offer them, hey, I'll pay you 7% on your money. I'll pay you 8% on your money. And here's the thing. Let's go back to the hard money lender. What did I say? You're going to make those interest-only payments every single month. All right? Now, with the private lender, you can negotiate. Hey, look, you fund the deal. I'll do everything that needs to be done to get the deal done, to turn it around, to get the property sold, and I will pay you once the property sells. I don't want to have to be, I don't want to make the monthly payments. Those are things that can be negotiated. Now, a private lender might say, no, I want a monthly payment. But the point I'm making is you can have people offering you capital to do your business, and they realize you have the track record and you have the ability to do what you say that you're going to do, and it also helps them make money. and it's a win-win situation. And when you build your business up to be able to do that, there's no stopping you. Now, once again, my name is Terrence Young. I hope this training has helped you. And if so, share it with somebody. Let somebody else see this. Somebody else may need to go ahead and get started in business, need to start developing that track record. And they don't even realize it because they're looking for that private money, but they don't realize the easiest way to private money is just teach them what you already know to other people, and the private money will find you. Now, if you have a deal that you want to discuss, that you need financing for to help you develop that track record so you can, get off the path of needing financing, but until then, let me help you. Go to my website at efunder.pro. Just scroll down and pick a time on my calendar, okay? So that's efunder.pro. Once again, my name is Terrence Young, and I hope this training helped you, and see you on the top.